Canadian companies are some of the best stocks in the banking sector, not only here in Canada, but also throughout the world. In fact, when the 2008 financial crisis occurred, Canadian banks did not cut their dividends, and many of them recovered from the financial crisis and the decline in the stocks within a year or so. What's more, the Canadian banks pay very high dividends, and in fact, they're known as Canadian dividend aristocrats, as many of them have grown their dividends for multiple years. While there are advantages to owning the Canadian banks separately as stocks, in this video I want to share with you a different approach how you can own the Canadian bank stocks through exchange traded funds. And rather than owning one particular bank, here you can own a basket of different banks in Canada. So let's get into it and discuss the top 3 exchange traded funds for owning Canadian banks. The first on the list is ZEB, or BMO Equal Weight Banks Index. As the name suggests, this ETF gives a relatively similar weight to different banking stocks and consists of 6 different banks. Here on the list we have National Bank of Canada with roughly 19% of assets, Royal Bank of Canada with roughly 17% of assets, Bank of Montreal with 16.5%, Canadian IMPERIAL Bank of Commerce with 16.3%, Bank of Nova Scotia with 16.3%, and lastly, the Toronto Dominion Bank with 16%. As we speak, ZEB is traded at around $22.41 and shows an increase of 4.72% today. Despite the decent growth in the value of this ETF today, it still shows a decline from its all-time high by about 35.9%. ZEB currently offers a dividend of 3.96%. As this is an exchange traded fund, there is some fee associated with that, and that currently sits at 0.062%. The second ETF to review is called ZWB, or BMO Covered Call Canadian Bank ETF. This ETF provides a unique spin by offering covered calls to accelerate your returns and as a result provide higher distributions. This is why ZWB have a higher dividend yield, and it currently sits at 5.85% in dividend yield. When looking at the top 10 holdings for ZWB, the top pick on the list is in fact the other exchange traded fund that we reviewed here. ZEB forms close to 29% of the assets for ZWB. Then moving on this list, you have a little bit more exposure because you get a little bit more shares of the banks. On top of this list then is National Bank of Canada, an additional 13.29%, Bank of Montreal 12.20%, and Royal Bank of Canada with 11.51%. You also have on this list Canadian IMPERIAL Bank of Commerce, Bank of Nova Scotia, and Toronto Dominion Bank. Because of the feature of covered calls and as a result higher dividend yields, this ETF charges a higher fee. The management expense ratio for ZWB is at 0.72%. Lastly on our list we have RBNK, which is RBC Canadian Bank Yield Index Exchange Traded Fund. RBNK offers a dividend yield of 4.13%. When compared to its all-time high price, there's a potential of 36.7% growth still for this stock. RBNK is one of my favorite ETFs when it comes to investing in the Canadian banks. It has a much lower management expense ratio, currently at 0.33%, so almost half of what you would pay compared to ZWB. Unlike ZEB, where you had a more or less a relatively distributed weight, here the Bank of Nova Scotia has a much higher weight. In fact, 25.64% of the assets here belongs to Bank of Nova Scotia. Next on the list we have CIBC Bank with close to 25%, followed by TD Bank, Bank of Montreal, and lower on the list we have RBC and National Bank of Canada. You could see how the asset distribution is very different and varies from the lows of 8.36% to the high of 25.64%, unlike ZEB where the asset was distributed more or less equally. So one of the main advantages of owning these exchange traded funds consisting of a basket of different Canadian banks is the fact that they pay you a dividend on a monthly basis. Unlike the banks where if you hold their stock, they're going to pay you a quarterly dividend. So here's definitely one of the advantages where you can have a consistent cash flow coming in every month. There are a number of disadvantages with these exchange traded funds as well. One is the fee that you have to pay as you own them. Now, one thing that would offset this fee is the fact that many of the brokerage firms allow you to buy exchange traded funds at no cost. For example, with Questrade, you can buy ETFs without any fee, whereas if you were to buy a stock, like a banking stock such as Royal Bank, Bank of Nova Scotia, or any other stock, you would have to pay a trading fee. Now, there are alternative brokerages where they have removed this fee altogether, such as the Wealthsimple trade that we've talked about in our previous videos. The other potential disadvantage here would be the dividend yield. There are some banks that pay a much higher dividend yield altogether. For example, Bank of Nova Scotia at this time pays a much higher dividend yield, sitting closer to 7%, or the Royal Bank of Canada has a dividend yield close to 5.2%. There you have it, folks, the top 3 Canadian banks exchange traded funds. I hope you found this video of value. If you did, please make sure to hit the like button and join Momentum channel. On Momentum, we post videos weekly about investing, finances, and personal development. Be sure to let me know in the comment section below. Have you invested in any of the Canadian banks? And which of these ETFs would you consider buying? I would love to hear your thoughts in the comment section down below. Now, as a bonus piece, if you've watched the video until here, I have an offer for you. If you are new to investing, be sure to take advantage of our promotional link to get started with Wealthsimple. This allows you to invest with Wealthsimple passively, and your first $10,000 invested would be free of charge at no cost from Wealthsimple. This is such a great offer, and I hope you can take advantage of that. If you want to know more about investing with Wealthsimple, check out some of the videos provided on our channel. I'll include the links to those videos in the description as well. Have a great day.